Hey everyone, my name is Sean and this is Sean Stocks. Welcome back to my channel. Today we are going to continue talking about the underdog, the lucky stock, the one and only CLOV, CLOV. And today has been kind of wild. It's been kind of wild to see the crazy movements that of course we expect to see out of this beautiful stock that we've been investing in and talking about for a very long time. I made over 70 videos about Clover Health even before it shot up to $28.85 all the way back in June, and I'm still talking about the stock that I'm still heavily invested with, especially on Twitter. You know, I haven't been making a lot of videos. There really hasn't been a lot of big movements recently for this stock at all, and you know, in the times that it did, the little times that it did, I was tweeting about it. So make sure to follow me on Twitter as well. But, you know, and here's the thing, right? When we take a look at the most recent movements for the stock, it actually seemed like a very, very dang good day for the entire movement, right? For today, we saw amazing movements right in the regular hours, right? So we started off the day opening up at $7.28 and reaching an intraday high at $7.68, and pretty much bullish for the entire day, staying above that volume weighted average price, that VWAP there, right? But we saw a big drop in the after hours, a really big drop. And, you know, people are like, oh my God, the sky is falling. You know, what is this big drop that we're experiencing? What's happening, right? Well, here's the thing, right? When we see an increase for 5.59% for the day, up 40 cents for the entire day, and we see it in the after hours drop, you know, 0.69 cents. So $0.69, 69 cents there. You know, it's like, okay, you know, why did we have this drop? Luckily, it wasn't all the way down to the ground to the all-time lows or whatnot, right? But it was still a pretty good drop there in that sense. And it's kind of mixed feelings, right? Because you really want to see this get closer to above $8 at some point in time, in the future, right? And we've been at $7 for a while, at the low sevens even for many days as well. And, you know, it's like, it's a little bit of news that I would put as neutral and potentially good, right? And this is something that if you have to think about a little bit hard, you can't be like, oh, you know, this is it and this is terrible, right? You got to think about it and see where you're coming from. So let's take a look first at this news. We're going to take a look at this news article that we have. I also have a little chart there. So it first says here, right, that Clover Health Investments Corporation announces proposed public offering of Class A common stock. Okay, so it says here that basically that it has commenced an underwritten public offering of 35 million shares of its Class A common stock. All of the shares are being offered by Clover Health. In conjunction with their offering, Clover Health intends to grant to the underwriters a 30-day option to purchase 5.25 million additional shares of its Class A common stock. The offering is subject to market and other conditions, and there could be no assurance as to whether or when the offering may be completed or as to the actual size or terms of the offering. It intends to use the net proceeds from this offering for working capital and general corporate purposes. So Citigroup and Deutsche Bank Securities are acting as joint book running managers for the offering. SVB, Leerink, and Canaccord Genuity LLC are acting as book runners for the proposed offering. This offering will be made only by means of prospectus, copies of the preliminary prospectus, okay, yada yada. So there's a bunch of other stuff as well there. But let's take a look at a little bit on the SEC filing. And we're going to take a look at the letter from Clover's founders. Maybe this will give us a little bit more insight into what they're talking about. And so they said here that our mission An opportunity is to help the most people as possible, and we believe our model of data-driven, personalized primary care driven by our software platform, the Clover Assistant, is key to truly accelerating transformation in healthcare. We intend to keep investing in growth and rapid expansion, and we will continue to pay for the needed care of our membership. While we do so, we acknowledge the cloud of uncertainty from the pandemic, something that affects each and every one of us, but we see this as a one-time event to be navigated through, not a systemic change to our assumptions or approach. And this is why we are now announcing the raise of additional tranche of capital for Clover that will help us continue to push forward our mission and take advantage of the clear growth opportunity in front of us. We recently announced a major expansion of our Medicare Advantage plan, entering 101 new counties in 2022, and we're excited about the opportunity to bring our great plans to even more people through ongoing annual enrollment period. We recently added direct contracting to our business, resulting in an almost doubling of medical expenses managed by the Clover Assistant, and we are looking forward to expanding our market-leading direct contract entity even further. And the recent upgrade of our Medicare Advantage PPO plan to 3.5 stars on the Centers for Medicare and Medicaid Services star ratings show our continued momentum in improving quality of care, even on a wide network. We're incredibly proud of what we achieved at Clover. We think we're onto a truly differentiated model. We believe our moat is wide, not only in terms of our raw technology pedigree, but also, honestly, due to failure of incumbents to see the world could be different. In the short term, while we do anticipate continued uncertainties, we believe the fundamentals of our business are strong. We always invested and raised capital to keep driving relentlessly to transform to a transformative moment for healthcare, and we intend on to keep doing it. Finally, to all our investors, whether you bought shares in our Series A or you first share or your first share yesterday, we thank you for your support. We believe you'll one day look back and be proud that you were part of this journey. So a lot of the stuff they talk about, like basically talk about the pandemic and everything being that apart and everything like that. And there was unforeseen care due to the pandemic as well. But overall, when you see something like this, you're like, okay, what are they going to do with their money, right? And so here is what are they going to do with this money, right? So I made this little graph out. It took me a little bit of time. Sorry, it doesn't look the best, but hopefully it makes it a little bit more clear and kind of going into speculations at the bottom. So here we got Clover Health here. We got a public offering of Class A common stock. What is it? We got 35 million shares. So let's say it's $7, right around $7 right now. $7 times 35 million is $245 million worth. And then we got 5.25 million additional shares, 30-day option, which is about $7, so 36.75 million, 281.75 million. That is a lot of money. That is a lot of money that they're trying to raise. At the very least, I could see that something like that, for this. I think it was like 288 was the max or something like that as well. And so, and I think that may have been for just 35. But the question is, do they need the money, right? Do they realistically need the money? Well, the third quarter 2021 financial results say that they have $588 million on hand, right? So that's a lot of money on hand, $588 million. They redeemed warrants as well in August, September timeframe as well there. And that something like that is long-term bullish. So, you take a look at the outstanding shares. We got 427.84 million outstanding shares. So 35 million shares of that is about 8%. About 8% is what we're talking here. If we take a look in the after hours, it was a 9.13% drop. Obviously, it's not 1-to-1, but still, that was a pretty big drop in the after hours considering all this. But of course, the after hours, we'll see how it pans out tomorrow, right? So about 8% dilution. I'm surprised on it, but when we're talking about a hyper-growth company, is it really that surprising? We got a great potential for this company to grow. And they said, why are they doing this? For working capital and general corporate purposes. And to me, that seems really vague. So we're going to go into speculations, right? The first one is that I like the most is cash for an acquisition. Now, could this be something that they're pulling in $280 or $281 million to acquire something? Is that something that they're trying to do? Are they trying to get something that will help out the Clover assistant? Maybe that would be kind of like my guess toward it, maybe, right? The other thing is general expansion. Is this going to help out with just expansion in general? We have open enrollment. Do they need extra money for this? It's until December 7th. Maybe need extra money. Maybe they don't want to burn through current cash reserves. Maybe we want to have better debt to equity ratio as well going forward. And maybe they're just expanding primary care program and need extra funds, right? So these are all things that I'm kind of thinking about, and maybe some other people mention them as well. And to me, when I think about these, they obviously don't need, they're not like heavily in debt and like, oh shoot, we're going to go bankrupt in like a week or two, or, like in 3 months or something like that. And that's why we know they have $588 million on hand. So, you keep that in mind and you're just like, okay, what is their game? That's why I kind of have this speculation. If you have any other ideas past this or any expansion on these ideas, definitely put them down in the comment section. I really want to hear what you guys have to say about it, okay? I think it's bullish, though. I think it's either at least neutral, maybe bullish. I don't think it's bad news. I think it would be bad news if they're saying, hey, we're losing money like crazy. We need to dilute our shares because we got to get out of this hole of debt that we're in. They're not really in debt from that standpoint when you take a look at their cash on hand. So again, it's definitely something that really just seems like big expansion, something that's needed, maybe to do an acquisition, a lot of things to keep in mind there. Okay. The next thing that I want to talk about, of course, is we're going to jump around here. We're going to, as I mentioned earlier, they expect the average number of direct contracting lives in 2022 to double from current levels. This is something that is pretty unprecedented, right? You see something like this and you're like, okay, let's go, right? Because again, you take that into consideration. If they're able to accomplish what maybe we'll get that extra half star there to get to 4 stars going forward. Maybe we'll make some big moves coming up because that would be really the game plan. The game plan is to get that 4 star, and if they are able to do that, that's definitely gonna change the tides for this stock overall. Okay, so this is something they said here. It expects total lives under Clover management to grow nearly 60% to over 200,000 in 2022, as previewed on Clover's third quarter 2021 earnings call earlier this week. Clover had deferred announcement of its projected direct contracting aligned lives until receipt of initial direct contracting alignment estimate for 2022, which it received yesterday. Now it expects its average number of direct contracting aligned lives in 2022 to double to current levels to 125,000. This company continues to have great news. You take a look even at this 35 million shares offering that they're doing right now. It's just still like, hey, I think that these people in leadership are smart, right? They know what they're doing. And I think that I truly believe in the company, and I hope that it succeeds. And I really do want to succeed because I have a lot of money in this. Next, another thing that happened, I think that happened on the 12th there, that last thing that I was talking about there for the direct contracting lives to double. That was on the November 12th, as you can see here. But for today, Monday, November 15th, we actually had an upgrade in the price target. So the price target raised, it's kind of funny how things happen on the same day. The price target raised to $9 at Credit Suisse Group. So it had its price objective raised by equities research analyst at Credit Suisse from $8 to $9 in a research note issued on Monday. The brokerage presently has a neutral rating on the stock. The price target would suggest a potential upside of 25.7% from the stock's previous close. Again, that's a lot. You know what I mean? If you're really saying you want to compare it to like S&P 500, I mean, that's definitely beating it from that standpoint. For the S&P 500 average, if it pans out, if that's for a 1 year price target. So You never know. You never know with this. I mean, of course, we see crazy things all the time, and I think that actually makes a lot of sense, and it shouldn't be too hard. Even with this a little bit 8% dilution there, it shouldn't be hard at all. Next, let's go into Ortex to talk about the short interest percentage of the free flow. And if you like this video, please smash that like button for me. It really does help. Also, subscribe and ring the bell so you can get notifications on my upcoming videos. In Ortex, we can see that the current short interest percentage of the free flow is sitting at 13.43%. The cost of borrow average is 1.44%. The cost of borrow max, 2.32%. Days to cover, still really, really dang high. Days to cover is about 2.14 days. Utilization rate is sitting at 68.03% there as well. Utilization, look at where we're at for the utilization, right? The last time we had this much utilization was back in about April. Okay, back in about April was when we had the same amount of utilization that we have not utilization, excuse me, days to cover that we have right now. And here we are getting right before we saw this stock go all the way up to $28.85. It was sitting about the same amount, 2.12 days to cover right there. So, hey, you never know, but definitely something to keep in mind right there on the stock. Let's see. The next thing I want to talk about is institutional ownership. Again, really to just keep in mind and have that little bit of long-term perspective, right? If I wanted to, I'm one of those people that when it shot up to $28.85, I sold zero, right? I had a lot of money in the stock, and I didn't sell a single share because I really, really believe that that's not where the price should be. I think the price should be a lot higher than that. And so, I look at it from a long-term perspective. I think, especially going long-term, it should definitely be higher than that. Price targets, in my opinion, are still pretty low. I think that the stock should be in the $20 range naturally. And so that's why I'm heavily just buying as much as possible in these $6, $7 sub 8 amounts that we're looking at. But look at the institutional owners, 195 total, 172 long only, 2 short only. That is very, very low. I think we had 7 or 9 or something like that back in June, if I recall correctly. 2 only short right now. It's not a lot, right? We got 21 of a mix there of long short, but again, taking a look at that, it is something that, again, just shows the bullish potential of this stock, in my opinion. Next, we're going to go into Ape Wisdom to see the trending stocks I'm in the last 24 hours. As you can see, Tesla is still number one. We still have Tesla is still number one there. We got S&P 500 following very closely. Progenity, Nvidia, Lucid Motors, Rivian, Tilray, GameStop, Sundial Growers, and of course Clover Health number 10. Clover Health number 10 moved up. Look at that. It's finally trending again. Moved up 50 spots. Okay, that's a big jump for Clover Health. Definitely really big jump for Clover Health to see there. And honestly, great to see. Great to see it back on trending. Great to see it back in the top 10 as well. Next, we're going to talk about the Max Pain. Now, this might change by a lot tomorrow, especially when we see the big movements in the after hours. But the stock price, as you can see, is $6.88. The Max Pain for this week is $8. And usually, we've had the price of the stock being around the Max Pain for the last couple of weeks. And it still is kind of around that $8 right there is a lot higher than we are currently, $1.20, $1.12 essentially, right? And so that would be very, very crazy to see a swing like that before Friday. Here we are on Monday. But you never know. I don't know. Who knows? Sometimes when we have bad news or good news or neutral news, it really just depends, right? And maybe some people think, hey, this is dilution, it's bad, right? I don't think so. I think it's pretty neutral from my end, right? But when people hear news like that, they're like, maybe that will help out the stock. I don't know. Stock price and company seem to be two different things sometimes. But of course, we take a look at that Max Pain, $8 there, and maybe we'll get close to it. I think that'd be really, really cool. And I don't know. If I had a guess, I think that we'd be back in the $7 range. I can't really foresee this stock getting to all-time lows from news like this, to be honest. If people understand what's happening and think about what's happening from that standpoint, think about how much cash they have on hand, I think that, again, it's just good news, or neutral news, if you want to put it that way as well. But hopefully we get closer to that max pain this week, because they definitely want to get the maximum pain out of it as well, and put all, or as many call options, many puts out of the money as possible. And that's what we're looking at for that max pain. So maybe that will happen again. The last thing, of course, that I have is the meme from Reddit. I love talking about Reddit memes. And this one says, CLOV will rise again. The after hours panic selling was pathetic, and I'm putting on my buying pants in the morning. Don't panic is there. I love that. And so I, again, agree with that. I totally agree with that. I would say, at the end of the day, I'm just hodling. I'm looking at it. I'm like, wow, that was a big swing, that someone could have done right there. It seems like that's always the case with this stock. It's so much fun. And I'm not really worried, right? I am kind of one of those people that invested in my I have a huge investment in this stock, and I'm really here for the long term. Of course, but also, as I've been saying, maybe we could see something short happen, a short squeeze, a gamma squeeze happening in the meantime. And to be honest, I want to see it go pretty dang high. And I think $28.85 is not enough to keep me going. I think that's just where the stock should be trading, in the mid-20s at this point in time, because especially with all the good news that's been surrounding this. So that's, it's one of those things that you just have to stick to what you believe in, stick to your convictions, keep in mind speculations. What are they talking about? What are they trying to do? We can only think about it. We are not, I don't think that I'm as bright as the leaders of the company, but I can definitely say that I think that I trust my money and my investments within this company to want to continue and just see what happens. I haven't found anything really that I have much bigger conviction in than this stock. And so when I see movements like this, I'm like, crazy stuff happens, right? But I want to see how it pans out. So we'll watch this together and cry together, or laugh together, or hopefully we'll look back, as they were saying, and be very thankful that we got involved with this very, very early on. Maybe we're just early from that perspective as well. So that's it for this video. If you like this video, please smash that like button for me. And as always, have a lucky trading day tomorrow, you lucky people. Take care. Bye-bye.